Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. In today's podcast, I wanted to discuss CBIZ earnings, and that's CBIZ, which is the 10th largest accounting firm in the United States. For Q1, they reported a revenue increase of 2.8% year over year for the first quarter, but this revenue increase isn't expected to last the full year. And another thing that CBIZ announced was that they repurchased shares in the open market of almost $30 million, but they will not be repurchasing shares for the foreseeable future. And I'm sure they regret buying these shares back at this point because they need the cash. Speaking of cash, they also took out $210 million of a $400 million credit facility. And this credit facility is basically responsible for their whole cash position at this point. Hopefully they use this credit facility to keep their employees. Their earnings per share was down year over year to 66 cents versus 67 cents last year. And in the prior year, they grew EPS to 67 cents from 64 cents in 2018. So they weren't experiencing crazy growth before this. And in the report, they stated that COVID-19 started impacting their business at the end of March. So it's obviously not impacting this report very much because it doesn't show in their Q1 results, but I'm sure it will begin to show in Q2. So make sure to stay tuned for that. And they wouldn't have drawn down on their credit if they didn't think that it would impact their business. And you can tell because they weren't holding that much cash at year end, and you can see that in your financial statements. But after drawing down on their credit facility, they have a ton of cash. They have obviously over $200 million in cash, and this is going to hopefully make up for their large drop in revenues. And just for some perspective, $200 million represents over 20% of their 2019 revenue. And this is revenue before expenses, everything. So they're expecting a significant decline in revenue, which I'm sure we can basically project that across the market into the Big Four accounting firms. And we can use this to look at the Big Four accounting firms. What we can say is that most of the year will be good for the Big Four accounting firms, except for starting in April and probably for the rest of the year, because April and beyond is going to be a brutal year for everybody. The Big Four have been taking measures like cutting pay, laying people off, and putting people on furlough. But I don't see them taking out debt like CBIZ because you do have to pay back the debt. But in public companies, it's more common for them to take out debt. But I don't see a bunch of partners in the Big Four accounting firms wanting to take out debt, having to pay it back, and having to pay interest on that, all just to save employees. Now, I do think they'll try these other measures, but I don't know if they'll be taking out debt like CBIZ. So just wanted to provide an update on that so you can get some insight from a public company that's actually an accounting firm, and we can continue to keep an eye on this to see what to expect from the Big Four accounting firms. But as of right now, CBIZ, their earnings weren't that bad, and they haven't laid people off. But I'm sure that might change in the future. However, if it doesn't, it's probably because they took out a lot of debt. So to stay up to date on all this, make sure to subscribe to this podcast and subscribe to our YouTube channel, Big Four Accounting Firms. Thanks for listening.